Yeah, hi, good morning everyone. This is Rajesh Palga from the technical desk. I just take you through the Nifty and USD technical view for the day. In the last trading session, Nifty opened on a positive note, but from the opening tick, we have witnessed the selling pressure in the market, and Nifty closed below 95.50 level at 9511 with a loss of 64 points compared to the previous trading session. So in the last trading session, Nifty has given the decisive breakdown below 95.50 level, which was very important support area for near-term trend ahead of this June series expiry for derivative. So now if Nifty continues to trade below 95.50 level, then we'll see furthermore selling pressure to continue in the market, and Nifty can go down further from these level, and lower side 94.70, 94.45 are the next support area for the Nifty for this corrective action. So looking at the near-term chart and the other parameters, it's suggesting that there is a negativity on the near-term chart, and we'll see some more pressure or supply pressure to remain continue in the near-term basis. So near-term trend is negative as the Nifty is now trading below its important moving average of 20-day moving average, which is also supporting that there is a negative bias in the near-term basis. However, on the short to medium term trend, the trend is still positive. On the longer term time frame, the chart is still holding its long term breakout area. So we suggest one should wait for corrective action to continue, and one should wait for major support area to come around, like for Nifty we expect 9400, 9350 are the major support area for this corrective action. So one can wait to initiate buy around those level. However, on the higher side, 95.50 and 96.20 are likely to act as a resistance area for any kind of minor pullback action in the near term basis. Even if you look at the indicators are also turned negative in the near term charts as well as on the short term chart, which is also supporting negative bias in the near term basis. For the day, 9535 is the important level to watch for. If Nifty manages to cross this level, then only we'll see some sort of comfort in the market on the buying side. Else Nifty will face the resistance, face the selling pressure for any kind of minor pullback action. If Nifty trades below 9535 level, then lower side support for the day are 94.70, 94.50. If Nifty manages to cross 9535 level, then on the higher side 9550, 9575 are the resistance area for intraday basis. Moving to the stocks front, some positive bias stock for the day are Aditya Birla Nuvo, Havells, ICICI Bank, Motherson Sumi and Reliance. Negative bias stocks for the day are Bank of Baroda, BPCL, NMDC, Oil India and REC Limited. Now moving to the USD review. In the last trading session for July series, USD closed on a flat note with a minor gain of 0.02% compared to the previous trading session at 64.78 level. We have seen again USD has witnessed very narrow range kind of move in the last trading session. It has moved only 15 bips kind of trading move we have seen in the last trading session. It has moved in the range of 64.65 to 64.80 level. If you look at the last 4-week move of the USD, it's consolidating continuously in the range of 64.95 to 64.50. This was the consolidation of last 4-5 weeks. So until unless we will not get any kind of decisive breakout or breakdown of this range, we'll see furthermore consolidation action to remain continue in the USD. So for near-term trader, whenever you see any kind of dip near to the 64.65, 64.60 level is a buying opportunity with the stop loss of 64.50 level. On the higher side, if USD moves towards 64.9095 level is a shorting opportunity with the stop loss of 65.10 for their short position. If you look at the short to medium term trend is negative on the short to medium term basis until unless USD managed to give decisive breakout of a 64.25 level. So till the USD not crosses and close above on the week on week closing basis above 65.25 level, the trend is negative for the short to medium term basis. Thank you.